Now with us is Manouchehr Takin, a senior petroleum upstream analyst at the Center for Global Energy Studies. He previously spent 9 years analyzing global energy and oil markets as a senior officer at the OPEC Secretariat. Thank you so much, Manouchehr, for coming in. In terms of what, this was a clear signal, or was it not, to OPEC that they should have increased production, and that if they won't, well, the IEA is here to provide that.
Well, they had said it and people thought it might be just propaganda or bluffing. But I think we should look at it as an interim solution. I think before the OPEC meeting, everybody expected that the world did require more oil in the coming quarter. So going from spring to summer, the world needs more oil, about 2 million more oil. And with the disruption of Libya, this urge was there. And because OPEC did not officially do it, even if they had done it, the heavy oil from the Persian Gulf is not the right crude. In the long term, it would solve in 3 or 4 months. But immediately, that wouldn't have solved, and there is a long shipping time. So this is available very quickly. Within a day or two, will reach the market, and it has also light crude in general. And therefore, it can be a stopgap now, seasonally, providing some oil and therefore coming down.
But until the Saudi production comes on the table, or will Saudi Arabia now look at this and say, well, actually, because there's that extra 60 million, I'm going to stay away and not increase production?
I think it is wait and see. Had even OPEC raised their capacity, official ceiling at the time, to legitimize their overproduction, I don't think too much oil would have come anyway. They would have waited to see what the market is. We have heard all this even today, that there is a fear of economic slowdown and a collapse. So this stopgap provides now this oil in the Atlantic basin mostly, which needs it. And then in a month or so, we will see how the global economy goes and how the supply-demand balance
works out. But at the same time, it does seem that markets are a little bit nervous. Now, we were talking about it's third time that the IEA has released strategic reserves, and the first 2 times it was for big political events. This, you were telling me, is the first time that they've directly targeted the markets.
That's right. The first time they are entering into commercial activity. They are influencing the market. Everybody, as we hear the commentators, are a bit nervous on this.
Everyone's nervous.
I think it has fundamental reason to provide the oil, as I said, on a temporary basis. Also has a symbolic reason, both towards OPEC and also as for the investors who are fearful of what is happening in Greece and so on.
So you're not concerned?
It gives a bit of perception, I think. It gives a perception of more confidence, things that are not going to be bad economically. The high price causing lowering down GDP and so on. I think it smooths that. It has two reasons behind it.
Manouchehr, so you're confident. The others are nervous, but we'll be confident here. Manouchehr Takin, thank you so much.